All right, what is going on, everybody? Welcome to this week's Wealth Workshop. We're going to be talking about lump sum investing this week. We're going to be talking about the meme stock rally. We're going to be talking about inherited IRAs, and we have an interesting question from a reader about gold. So welcome to this week's Wealth Workshop. Jacob, how you doing this week?
Yeah, so far so good. I don't know what mood I've been in. I guess you're not gonna guess. It's I just
Oh,
feel
I
like
was supposed to guess. Funny.
I guess I said you want to know, but I just feel like I want to spend money. It's really
Oh,
weird. I
interesting.
haven't quite
Okay.
felt like that before, but like I've just got like all these things that I'm like I want to buy something.
Okay.
So I've got like this weird itch, and who knows? I'm pretty disciplined about not scratching that itch, but
Okay.
I already have bought a few bigger ticket things. But how have you been? What's been the
I'm good.
highlight?
I think the highlight, I got to say this. This is kind of there's two answers. I'll give you the professional answer, which is the melt up in the stock market.
Yeah.
So it's always a little nerve-wracking, right? When things go, when there's volatility to the upside, when the market melts up, man, that's hard to say. Other than that, we're coming off of a summer vacation, so I feel like our family's in a little bit of a rut right now, getting back into normal life. But all things equal, we're live. The market's up, so I'm good.
Good. Well, let's talk about an
All
upward
right.
market here. Gold's been on a rally for a long time. I suppose like 2 to 3 years now.
hmm
What are your thoughts on gold today?
So it's certainly a question that we've been getting. Uh, well, I think we always get gold. I think we
We
always
do.
get gold questions. So been doing this over a decade now, and it's not like a question that gets asked all the time, but it's certainly routinely asked. So, gold as an asset class, it's one of the oldest asset classes in, just period, right? There's some economic utility, right? Like I have my grandpa's wedding ring on from 1945. So like somebody in
Mhm.
1945 made this wedding ring. It's worth something, right? So gold obviously is hovering around all-time highs. There's been a lot of renewed interest in gold. But I think like, when I think of gold and like, is it too late to buy gold? It obviously depends on your timeline, right? I would say like we're not huge gold investors here. Um, just based on like our philosophy of investing, I think like gold is always I think like when we went to business school and when we're learning how to invest and how to put portfolios together and how to serve clients, right? Gold has always been like an inflation hedge. And
Mhm.
I think like the place to beat inflation, yeah, I guess we would probably prefer to beat inflation, using operating companies and public equities, versus gold.
Yeah, gold is a
What are your
huge,
thoughts?
it's a huge diversifier for
hmm
portfolios. I think that's really like the place that people put it is like, oh, if the dollar goes down, I want to own some gold, right? Which would be inflation. Or, if the stock market goes down, I want to own gold as like a diversifier. Um, but in many cases, like it doesn't have the same diversification benefits that like bonds do with like the income component. It's still somewhat correlated to the regular equity markets. And so I think it loses some of its pizzazz, just like in regular portfolios. Now, I don't think that I think it's a good asset generally. Like I think
hmm
that there is definitely a place and an allocation for it for people and in strategies if, just knowing like how to build a portfolio around it is really important. Um, so it's not necessarily bad. I think it's had a really nice run, which is a little scary. Like, who knows? It could consolidate. The price could, and you could see just like price going nowhere for a few years, which would be, you know, you don't want to miss out on gains elsewhere, right? It's an opportunity cost question.
And the problem with gold too, of course, is if it doesn't go anywhere, you don't get paid. You actually like have to pay to hold
Yeah.
the asset, right? Because it doesn't produce cash flow. Like there's actually like a drag, on it. Like you have to pay fees to. Well, usually people are like, I guess the level at which we're talking about, we're not talking about like going to Costco and buying a gold coin. I guess
hmm
we're like, if somebody has a $2 million portfolio, what percentage of that portfolio? I think that's where this question came from is what percentage of the portfolio should be, in an asset class like that. So if that's where the question's coming from, and this you would be using GLD, right? Or some sort of ETF wrapper that uses options contracts to basically get exposure to gold. So I think that, looking at the market right now, like it seems like well, we've talked about this a lot actually, the composition of the gold market, which is, it seems to be just central banks, like huge, financial institutions buying gold.
Yeah, it's
And
50%.
yeah, it's 50% of demand is from the government. So when you think about like the composition of the market itself, like that's a very sticky buyer, we think. But if for whatever reason central banks stop, they stop buying gold, it'd be interesting to see where demand goes.
Yeah. Well,
Because
I think that it
then
would
the
just
price would go with it.
the demand would just go down because there's not, I mean, central banks control so much money and like their primary
Yeah,
purpose is literally just to keep money. They're not trying to grow it. They're just trying to keep it the same.
yeah.
And so they're, if they lost the bid on that side, like there's not enough capital in the world to really replace it. So that'd be a huge risk.
Hmm.
Um, okay, well, let's move on. Um, so another thing that's been booming, obviously, alongside gold is the AI theme. So since,
Hmm.
ChatGPT launched in 2022, I think Nvidia's, added about 3 trillion in market cap or maybe more than that,
Which is
becoming the most,
insane.
yeah, valuable company in the world. I think there's a lot of questions, floating out there about like, is Nvidia going to be an $8 trillion stock, or is like something going to come up to, replace it? Maybe an application, maybe like an Anthropic or a Claude type, software application is what's coming for the AI market. Where do you where are you standing on like the future of AI and maybe some more of these just like high growth, a little more uncertainty industries?
Yeah. Well, I think, we use ChatGPT, extensively here, right? Like we don't use it for it's nothing necessarily related to like client work, just due to the privacy concerns of using ChatGPT, but like running the business itself. And just, asking it random questions about like, hey, my banker said this, what does this mean? How do I best respond? Um, so I think as somebody who's used it a lot, it's fascinating, right? Like
Hmm.
there's uh it's been super helpful. Like I don't think we would be where we're at today without it. And I think a lot of people, feel like, actually, let me put it this way. I don't think people would go back to a world without it. Once you've tasted and seen what it can do, you're not like, I don't think anyone would be like, oh, I would love to go to a world without it. So I think we're all like, humanity, I would say, is largely bought in. From an investment perspective, what's crazy is like Nvidia's earnings have actually kept up. So
Yeah.
when you look at like
Yeah.
the FPE, the forward priced earnings of Nvidia, I mean, it is still
Reasonable.
it it is
Yeah.
reasonable. It's obviously incredibly expensive. There's a huge premium for the growth, but it's actually like its earnings have caught up to the multiple that is trading at.
Yeah.
Um, so the story has legs, right? Like this is an industrial revolution, and so there's definitely I think like from what we're reading, like this isn't 1998, right? Like this isn't pets.com. Like there's actual utility, to what's going on. But
I think
I think that the paranoia in me is always like, what comes up must come down fast,
yeah. Yeah. And I think there is some like bubble nature, right now. Like you even look at ChatGPT, I think their last fundraising round, like maybe they raised like at like a $350 billion valuation or something like that on, maybe I think they had losses, earnings losses, and
Yeah.
I think they were making like 20 million in revenue. Like that's a big valuation you know, for what they're doing, especially
Hmm.
like if they're operating at losses. And I think there's a lot of that maybe in the private markets. We're not seeing it in the public markets yet. Um, but that could be, that is really something to look for is like, well, once that starts trickling into public markets, like are we going to get some crazy valuations like we did in the late 90s, early 2000s or not?
Yeah. So I think that, the question everyone's asking is like, well, why wouldn't you just own, why wouldn't you just put all of your eggs in one basket, right? Like, why wouldn't you just have a portfolio that's 100% tech? So when, when thinking through like the volatility of some of this growth, um, like that's the price you pay. Like there's obviously like tech kind of like is the market, right? But there's some like undertones of like what's changing in technology, which is interesting. Like, SaaS, which is like one of the best business models ever created. There's some like SaaS means software as a solution. So, there's just some people within the tech space are saying like, well, SaaS is dead. Like when you think about like software as Mark Andreessen said like software is eating the world. It's
Hmm.
like yes, software is eating the world, um, and it has eaten the world. And but like once companies can just have their own software that they just use that they create with AI and a small engineering team, like what does that mean? I think our experience as an operating company, Fjell as a wealth management, the amount of software we've ended up with after doing this for 5 years, it legitimately blows my mind. The amount of like tools that we have to use to run our business, and I think a
Yeah.
lot of people are like, well, where does this end? So it's like, well, what does that mean for an individual investor then, right? I think like the like because there's so much uncertainty, it's like, well, why wouldn't you have some of your money in like a utility company, right? Like if there's so much sea change within that, there's so much growth, but there's also so much sea change. Having like durable businesses, like kind of like Warren Buffett-esque businesses that are just while the world is going digital and in many ways like blurring the lines of what is even real, having those durable businesses that actually produce income, for you, um, I just think is like, well, why not? You know what I mean?
Yeah. I'm with you.
I mean, obviously that's how we invest. But it is an interesting question, right? Like the price you pay to buy Amazon when it was early, I believe there was a 90% drawdown.
Oh yeah. Oh yeah. Amazon had a huge drawdown, and thank goodness Jeff Bezos was still driving his 2004 Corolla.
Yeah.
Or no, I guess it wouldn't be 2004. It would be maybe like a 97 Corolla or something. I know that he was like a billionaire driving his Corolla, but um, yeah. Okay. Well, let's talk about something that isn't built on an operating business. I think some of the questions we get a lot. We're getting a lot more questions, I think, about like crypto exposure and like if that should be in a portfolio or not. I think generally like there could be a place for it, but it's really hard to say like, how much. It's really hard to value it. It doesn't have the track record of, thousands and thousands of years like gold does. Um,
Mhm.
it started in what, 2008. So what are your thoughts there?
So I think, well, crypto's obviously had an amazing run, right? Like Bitcoin's at all-time highs. And like our president, President Trump, like he's totally a crypto guy. And I think like, his sons, Eric and Don, they own some big crypto company, right? So there's like
Mm,
some pretty significant like conflicts of interest there, perhaps. But the legislation is like is like crypto is real, right? So I think like from a legislation perspective, particularly with the stablecoin bill, which I don't know a lot about, but the bill that recently passed, that basically like put the rubber stamp of approval on stablecoins is like, that is good. That is good. So like there's some legislative clarity. I think the hang up that I have with crypto is like the market itself. So I was reading this a couple weeks ago that a Satoshi era wallet just moved, or I think it sold like a bunch of Bitcoin.
mm,
So I believe the amount of Bitcoin that is actually traded, like there's only, it's the majority of the Bitcoin is in cold storage, so it's not traded. So the market itself is so like there's legislation, there's how it works, and then there's the market and the participants. it still seems a little scammy to me, right? Where like Sam Bankman-Fried, like he's still locked up. That was only a few years ago. So I think it's headed in the right direction. But of course, a problem with stable coins, and we've talked about this, right, is like, well, where does it end? So if like JP Morgan has a stable coin, if Meta has a stable coin, if TikTok has stable coins, if everyone has stable coins, well, do we actually end up with nothing as consumers,
Yeah, but that's
or
true. Or do we
investors?
or do we end up with anything different than we already have?
Yeah.
Where you every time you go and make a purchase, wherever, you just turn your dollars into a stable coin and use it, and it actually serves no purpose for the business who created it because you're never actually holding anything for any amount of time.
Yeah. Or it's like, yeah, like what are the fees, right? Because like right now we all transact in dollars. And then, we swipe your Visa or MasterCard, like, the merchant pays a fees. So like, is this going to
Hmm.
be more efficient for us, or is it going to be, it seems like it's adding almost another potential layer? So I think the hope is that all these things are more efficient for consumers and they're more profitable for actual businesses. But there's a story I was reading about, or actually I was watching a YouTube video from this was been like last year, early this year, last year, about how in West Virginia the mining companies had, they like the mining companies were they were culture, they were society, they were business. I mean, they were everything. I believe they even like owned grocery stores, so they actually paid
Hmm.
their people and their employees in their own currency that the mining company created. So there was like this stranglehold that these mining companies had. And well, we all know what happened to mining in West Virginia, right? Like there is no mining anymore. Like the coal mines are gone. Society has moved away from coal to other sources of energy. So what ended up happening were those people, if they were saving money in the mining company's currency, like it just it like over the long term it just didn't work. So we think about, like, I guess it's worth saying, like, our perspective here is like long-term investing, right? Like we're dealing
Hmm.
with um we're dealing with families, retirement nest eggs, right? They've worked for 30 years and they're giving us they're placing trust and relationship in us to do what's best for them. So that's really like where we're coming from. This isn't like, we're not just talking to like 25-year-olds here who really just don't care. They're like, I just want to make as much money as possible and don't particularly care about risk. So I guess our perspective is worth noting. But that story just like comes to mind, with the proliferation of crypto and stablecoins.
Yeah, I'm with you there. I think what I said yesterday, I think was like crypto feels both too early and too late, where there's like not enough information about what the future could look like for it, where it's like, yeah, I don't exactly know what's happening here. But then also, of course, Bitcoin's sitting at all-time highs, and it's like, yeah, it's rallied an insane
Yeah.
amount. Um, so
And this is
yeah,
really, it's really like an opportunity cost question. It's like if you choose to invest in gold, that means you can invest in crypto. If you invest in crypto, you can't invest in the AI theme. Like there's only so much you can slice and dice a $2 million portfolio, right? So
yeah.
you have to get like the core building blocks correct, and essentially give yourself a budget maybe of how much to allocate to these different asset classes, right? Um, so it's a fascinating time. And then like we get to work on Monday, and it's like, oh yeah, meme stocks are back. If you had said to me like last month that me like we would be in an environment late summer, like August isn't a great time for markets. Like it's not, summertime just isn't that great historically. If you were to say like, hey, we're going to be talking about meme stocks, I've been like, no, there's no way.
Yeah. Yeah. Well, and it's really, yeah, there's Krispy Kreme, like you said earlier, there's Open Door
Hmm.
that's
Yep.
doing
I think
stuff. I can't.
I think Kohl's. I think
Oh
Kohl's
yeah,
is in there.
Kohl's.
Like the departments.
Kohl's,
Yeah, the
yeah.
department store.
Um, it's interesting. Yeah, I think like there's a lot of people interested in the markets again. There was an
Yeah.
interesting take that I had heard, and then I think we can move on here, but that people can't buy homes because the interest rates are so high and the prices are still high. So
Hmm.
there's a lot of people in like the market that are like sitting on like down payment money that they're like, well, I'm waiting, or I don't want to buy a house, or I can't afford a house. And so they're actually
Hmm.
just using this money that they've saved up for, potential home purchase, and they're just using it to throw money into stock market, similar to like how they did in 2021 with the stimulus checks. Isn't that
Yeah.
an interesting take?
Yeah, I could see that. Yeah, I could see that. So we've talked about like the people who are interested in investing. Let's talk about like the folks who have are sitting on cash. So this is another. So while we get questions about, obviously like what we do for a living is financial planning and asset management, right? So like we ultimately get questions all the time about, about should I be investing in this or this, or, what are we doing here? How are we? So, a pretty common financial planning question that we get, and we deal with this a lot, right? Is people who have $500,000 in cash, right? Or they
Yeah.
have a significant cash portion. So, um, what's the play? What's the play with cash right now?
You know, I it,
If
it
somebody
you
were to
know,
have a bunch of cash.
so, particularly I think like if you're looking at the markets, you just talked about like how everything's sitting at all-time highs, and there's meme stocks, and there's crypto and gold that's touching all-time highs. Like um th I think like the long short is like there's a reason to be cautious. Like I don't think day one you sell your house and you get the wire for 400 and $50,000 or $500,000 is to just like dump it all into Nvidia stock,
Mhm.
obviously. I think there's like a measured approach of like, okay, I'm gonna hold some cash for a little bit here. I'm gonna earn the really nice cash yields that I can get, and I'm gonna strategically buy stocks, and I'm gonna strategically buy, let's just say it's in a tax brokerage account. I'm gonna buy municipal bonds for tax-free income.
Yeah.
Um, I think really like, we're as a firm, like for our clients, we're sitting on more cash than we usually would, um, as like an investment strategy, because we feel like there are risks in the market. So having cash right now, I don't think is a bad thing. But I think like if you were sitting on abnormal amounts of cash, like 500,000 out of a $200 million account, like probably looking for some opportunities, but slowly. I don't think it's something to rush into.
The first question that
What are your
always comes to
thoughts?
my mind, the first question that always comes to my mind is like how did somebody come up with that cash, right? So we've got a number of people right now that we're working with that have cash, and they accrue it in different ways, right? It's either like selling real estate, like selling a property, selling a business. Sometimes like inheritances can come. Like I was talking to a lady a couple weeks ago. It was like her mom passed away and she was dealing with life insurance settlement that
Mm,
from like a whole life policy. So I think that the
sure.
question is like always like, well, why do you like, is there a reason you have a lot of cash? And then there's some people that just always have a lot of cash, right? And we've always told clients, and cash is very much like a feeling. At some point, you get to a level where as long as you understand the math of holding cash, it doesn't. Um, and you understand the opportunity cost of having cash versus having invested in munis or real estate or equities. Um, so I think that it's always good to understand like why do you have cash? So if you're somebody who has like a normal level of cash, right? So um, you know if you spend $10,000 a month, 20,000 a month, and it's like, well, you have like $15,000 in your checking account and everything else is invested, and then all of a sudden you have $500,000. The that would be, you would naturally want to get that money reinvested. And I think what you're saying on the measured approach is particularly at all-time highs here, and when there's meme stocks involved in the market, that measured approach is usually, I think it's the safest bet, right? Like there's
Yeah.
all the stats on lump sum investing where it's like if you just do it right away, you're better off. But like you never know if you're going to be like the 3% of the time where the market just drops
Yeah.
materially. Like we had a guy, he retired and he wired, I guess he didn't wire, but he moved a couple $1 million into a traditional IRA in January of 2020. And we were sitting in cash, and we knew COVID was a thing back then, but we didn't know that. it would become what it was, right? Which was a global pandemic. So I think the measured approach, and particularly working with a team who can help execute that is really wise.
Yeah, and I mean cash yields are great. Like you're at 4%, so like you're not necessarily not getting paid like you were before 2020
Hmm.
or like in 2020, 2021 or before 2020. Like if you were sitting in cash then you were getting 0%, essentially. I mean nowadays if you're sitting in a money market, you're getting 4, a little over 4%, which like of course after taxes and after inflation, like you're not that far ahead, but you're also not behind. So,
And I always think like the more cash somebody has, the better the investor they have to be, right?
yep.
Like, if you just like have, because what you're doing is like you're essentially timing the market and saying, if you always have 15% in cash, like, well, you better be a pretty good investor to not be 100% invested. And I know like it's pretty common for real estate people to have, or, business owners as well to have a lot of cash. So, um, anyways, interesting question.
You want to know the type of question that we always get to? I feel like this comes up all the time, is just inherited IRAs. I think people like you talked about inheritance and just cash landing in your account or whatever it is. Like I think
Yeah.
there's some ambiguity that people have with like, oh my gosh, I just inherited an IRA from my dad or my mom, and now I have to deal with these weird regulations. So
Yeah.
maybe we could just take a little bit here just to clear the air on like what these are and how they work for people.
Yeah. So, obviously, we've invested, or excuse me, invested. We've surveyed, I don't know how many people we've surveyed going into the newsletter at this point, but it's like it could be in the tens of thousands. Like,
Oh yeah.
we have surveyed a lot of people, a lot of investors in particular, and folks who are heading into retirement, right? And I'm I don't know if I'm surprised necessarily, but like RMDs in particular, those are required minimum distributions. RMDs and taxes are really like a hot button issue. So within that like frame of question, is the whole issue of inherited IRAs, right? So, mechanically, what this, what inherited IRAs is basically an IRA that somebody gets from somebody that's not their spouse, right? So if your aunt, died and didn't have any kids, didn't have any, a spouse, just gave it to you, that would be considered an inherited IRA, right? So what's confusing about inherited IRAs right now is for the longest time, you basically had to take the money out of inherited IRAs over your lifetime, right? And now that the government's, revenue is essentially flat for, quite a few years now, the government's like, hey, we've got to figure out these IRAs because there's just some gigantic IRAs out there that, the tax rate that they're not being taxed.
Yeah.
So the new rules and regs for inherited IRAs are, well, you've got to take basically RMDs out of inherited IRAs over a 10-year time frame. So I think there was like when these rules changed, the IRS didn't give guidance on exactly how the money needed to come out within the 10-year period. So there was a lot of hubbub within our industry of like, well, how do you most tax efficiently get money out? Well, to me, there's not as because of the RMDs within the inherited IRA, like the rules. I think it's kind of a mute point. Sort of like the big beautiful tax bill, where it's like, oh, there's new tax legislation. It came out as like, oh, that's not actually that interesting. So
Yeah.
to sum up the whole inherited IRA thing, it's if you inherited it like this year, you're under the new rules, and there's just
Mhm.
RMDs amount, and the money's got to be gone in 10 years.
I think
And
that's a
if
good
it's a
point too.
tradition, oh, you go. Sorry.
I think that's a good point. Like the new rules, right? So like if you inherit an IRA and from somebody who passed in 2019, before
Mhm.
before that legislation passed, like you're under the old rules. So that's also what makes this a little confusing. Is like there's new rules and there's old rules, and then there's new rules, which is like clarification on the new rules that came out like a couple years ago.
Yeah.
I think really like that's why there's so much confusion, right? So there's the pre-2020 inherited IRAs, 2020 to 2024 inherited IRAs, and then 2024 and after inherited IRAs, and they're all like treated just a little bit different. There's just enough like small nuances that just screw people up. I think generally nowadays, like the laws are pretty clear. Like you have 10 years, you're going to take an annual distribution. After 10 years, everything's going to be out. But if you fall in the other two camps, like and I think one of the worst parts of these is inherited IRAs tend to be fairly small because most people live, especially if they're wealthy, like a long time, right? They might
Yep.
live until they're 90, and by that point, they're taking out 10% of the account every year with their RMDs. And so maybe your inherited IRA is like $40,000, and you're like, I've got $2 million in this brokerage account and, a million in my old 401k that's in an IRA now. And now I've got this tiny little inherited IRA that causes this much headache. I think that that's a lot of the rub too, is like, this is like no money and I have to deal with all this, stuff all the time.
Or I think another rub too, and I was talking to a gentleman last week about this. He's like, I have this inherited IRA, but it's so annoying to pay taxes on it. Like it's
Yeah.
increased. Like he has to take money out, and he got it from somebody else, but now he's got to pay all these taxes. And he's like, "Is there anything I can do to avoid the taxes?" I'm like, "Well, you can't do anything about the inherited IRA. Like that is just income that is just yours. The thing to you know, you would have to be doing tax planning elsewhere in your financial life. Whether that's philanthropy, whether that's buying a super expensive house with a huge mortgage, which of course is like, well, if you're in retirement or near retirement, like don't do that. So there's the levers to play, the levers to move to decrease taxation and while still keep more of what you've got. In this case, would have to happen elsewhere on your balance sheet. So, and then there's like, when you were talking about RMDs and like the complexity of them, then there's like RMDs for just your own IRAs. So I think we've
Right.
just talked with people and clients and non and just readers of the newsletter who are like, can you just help me understand like what this is? Because the chains have been moving just all over the place, right? Like whether it's an inherited IRA or whether it's if you're 67 now, when do you have to take RMDs? Or if you're 71, when do you have to start? Like there's a lot of different moving parts. And then my fear here too, and I think I'm going to be, I think I'm going to go down in history as being right on this one, is like, it will change again within the next 5 years, right? Like
Oh
I
yeah.
think the rules have been, it seems like in the last 5 years, there's just been a lot of changes. And my assumption and guess, because of the fiscal situation in Washington, as well as just the amount of wealth that's being created right now, like the rules are just going to change and it's going to be, yeah, it's just going to be complicated for people.
Yeah. Yeah. It's one of those things I think the only way to get out of taxes is by spending the money elsewhere. Like you buy the
Yeah,
big house with the huge mortgage, then you can use it as a deduction or like the interest as a deduction, or you give the money away, right? If you're already planning on doing it, it's a great way to like just consolidate it into 1 year. But like if you weren't used to doing it and now all of a sudden it's like, oh, well, I was talking to a lady, I think earlier this year of like, hey, if a way to get around some of these capital gains and big incomes that you have, you can give money. And what she said to me very, very like specifically was, um, well, I would still be spending the money then. I would still like
exactly.
lose the
Yeah.
money. And that's where like the really the planning on the whole, where it's like the planning doesn't just happen in the inherited IRA. It happens like in your life outside of the IRA. Um,
Yeah.
it's
And I
just how
wrote a
it goes.
piece.
Yeah.
Yeah, and that's wise too, because it's like so many people are just, and this is like business owners too. At the end of the year, they're like, I need to spend money. I need to spend money. It's like, well, what kind of return are you going to get on that money that you're putting back into your business, right? It's like, because if you save, if you spend $100, you get a 30% deduction. Well, you still spend 70, right? So
Mhm.
there's some like, it's just important to remember that like taxes are incredibly important, like incredibly important, and there are legitimate ways to pay less over time. It's just uh, yeah, I think there can just be like confusion, and then that confusion can lead to bad decisions, if it's not done, uh, not done properly. So, and the best way to do this, and I've written about this multiple times in the newsletter, is like to do it is to have a time frame of like a decade or two, right? So you spend a lot of time and you know the levers you're going to pull over time to become more tax efficient. And I always think about the case of when Jeff Bezos moved from Washington to Florida, because the state of Washington has, I believe, like a 6% tax on capital gains. So,
Mhm.
6%, whatever, that doesn't sound like a lot. It's like, well, imagine founding one of the most successful companies of all time and you want to start spending your own money. Um, and it's like, well, 6% adds up to tens of millions of dollars, right? So,
Yeah.
I always think of like he planned that move. He would have planned that move, years and years in advance, right? And I think that is like the type of tax planning that is really worth doing is taking like a really large chunk of time, versus and then splitting it up like, okay, what do we need to do this year? What do we need to do this year? What do we need to do this year? So,
Yep. Okay. Well, I think that's about all that we got for this wealth workshop here.
all
So,
right. There we go. Well, hey everyone, thanks for tuning in. So if you could, send us an email. Most of you guys are going to be coming from the newsletter here. If you can just send us an email of just how we can make this better. So these wealth workshops, we want to be answering your questions. So leave them either in the comments here or, send us an email, which will be in the link in the bio. Or if you're, a newsletter reader, just reply to the email. We want to be answering the questions that you guys are going through, right? So every single week we talk to people, we talk to you, the readers, the folks in our community, and each of you have really specific questions that other people are going through. So we want to be talking about what you guys are looking to solve. And, from our perspective as, financial advisors who serve, clients across the United States. So anyways, thanks for your time. We look forward to seeing you in the newsletter here, and we'll catch you guys next week.